We can see this flag pattern actually in a couple of different places. We see it here. We see it here. We see it here in a rather sharp way. But we also, and we see it here. This one failed, however, when it failed to break through this resistance point, although prices did go back up from there. But the important thing to remember is that prices will have this slow erosion after making significant progress to the upside. There's a slow erosion of prices over time that look fairly straight down, but in fact are continuation patterns. Opposite of that are patterns in which the market will start to decline. If we go back over some of these patterns in which large price drops have taken place, you can see that instead of, let me just move this out of the way for a second here. You can see that instead of having a controlled little decline like this one here in a straightforward fashion, this happened to be somewhat rounded at the top. Let's take another example. Here's the second pattern in which prices declined sharply. You have this rather rounded top in which prices shot up. They did form a slight little flag pattern right in here to indicate that prices would continue higher, and they did. However, at that point, it created a larger rounding process. This rounding process indicates that market prices will generally drop. So you have this higher bar, you have a down day, you have another down day, then you have an up day in here, and then another day in which the prices almost meet each other. But this rounding of this top is considered a bearish pattern. Here's another rounding top. It's very difficult to see if you've never seen this type of pattern before. But once you recognize it, you begin to see it in a lot of different stocks. This kind of a semi-round pattern. Here it is again. Slightly higher highs and then another higher high that kind of rounds off with this one right here. A slightly rounded pattern. Here's a very good example of this rounded pattern here. Higher, higher, flat, flat. They're all very flat at one particular point. It's an extreme rounded pattern. Here's another one where it's very rounded as it continues to decrease in price. So when prices are ready to decline, generally you see this kind of a rounded pattern at the top of a particular market or index. When prices are going to continue, they form flags. Here's a very good example of a flag. These are straight down, pretty much straight down patterns. There's no rounding in here. I mean, it doesn't have to be exact. This is just the general trend of the price after it has moved up. It has this downward slope to it. It's not rounded. There's a downward slope. Now look what happens when a price continues, when you have a continuation pattern on the downside. Here we have a rounded top. And how would we know whether or not this trend is going to continue? Well, we have a flag. See, the flag not only works for markets that are going up, as in these cases, but it also works for markets that are moving down, because a flag pattern will develop in which prices slowly begin to rise after a downward pattern. And these prices will rise and then round off again in order to continue the decline. These patterns are so prevalent in the market, although they do take some training in order to try to see them. It's very, very difficult, but once you begin to recognize these patterns, you can begin to at least have a good idea of how well and what the probability is that the market will either fall or continue its uptrend if it's in an uptrend, or continue to fall if it's in a downtrend. So here's the rounded pattern, here's a rounded pattern, here's a rounded pattern. This is only 3 bars long, but this one was a little bit better actually because it had 3 bars in it. It doesn't matter how many bars are in the pattern. When you get this rounding type of effect, rather than something that goes like this, straight down, this straight down pattern will indicate that prices will go higher. This rounding pattern will indicate that prices will probably go lower. And then in between these, you have flags. In fact, here's another one right here. This is a perfect flag. Isn't it? I mean, look at this. Prices just, I mean, they don't have a real bottom. There's a slight little bottom here, but what they do is they continue to move up in a very slow, methodical fashion from where they were. And it forms, you know, this little flag pattern. Once you get used to looking for these flag patterns, and you get used to them, it will help you tremendously in your ability to find high probability trades. So let's say you saw this rounded top here. Prices came down. How do you know that it's not a good time to buy and go long, hoping that prices will continue the uptrend that it had already established? Well, one clue is the way that prices reacted after falling. They gradually moved up, forming a flag pattern. At that point, you would have known that this was a continuation pattern and gone short because it's establishing a continuation pattern of this downward trend that was established here. Let's take a look at current market conditions. Currently, we have 2 tops that formed a very, very broad, rounded pattern here. In addition, this is slight. Each pattern, each point of its own was a rounded pattern. Prices declined here, but then formed let's do this, and then formed a flag. Right here.